Aotearoa, and welcome to Wednesday's Economy Watch, where we follow the economic events and trends that affect Aotearoa. I'm David Chaston, and this is the international edition from interest.co.nz. And today we lead with news. The bond market is dominating the news today, with sharply rising long-term yields as investors see no end in sight to the war inflation upon us now. The benchmark US Treasury 10-year yield is now up to its highest since the brief October 2025 spike, and before that, its highest since 2023. In those earlier peaks, there was nothing like the fundamental inflation pressures building now. And the US Treasury 30-year bond yield is now at its highest since 2007. And if it lasts, yield valuations are at risk, especially real estate. There's already severe valuation pressures in the commercial office market from low demand. A higher cost of money could do widespread damage to these market valuations globally. But first today, the overnight full dairy trade auction saw prices rise 0.6% in US dollar terms, rise 1.55% in New Zealand dollar terms. This is a stable commodity in a sea of instability elsewhere. The outcome may have been helped by the low volumes on offer, down 15% from the same auction a year ago. In the US, private employers added an average of 42,000 jobs per week in the 4 weeks to May the 2nd, up from 33,000 in the prior period, according to the ADP research. Strong hiring in healthcare is a key feature. US pending home sales rose 1.4% in April from March to be 3.2% higher than year-ago levels. But the recent modest rises are not yet enough to make back the big falls in December and the small fall in January. The sharply rising 30-year bond rates will likely affect this market going forward. In Canada, and as expected, their headline CPI inflation rate rose to 2.8% in April from 2.4% in March, and its highest in 2 years. But that is notably lower than the expected 3.1% rate, and probably takes the pressure off their central bank to raise rates. In Japan, they said their GDP came in with a 2.1% annual expansion in the first quarter of 2026, up from 0.8% in the fourth quarter of 2025. The rise was anticipated, but only a 1.7% rate. In Malaysia, their inflation came in at 1.9% in April, at the low end of their expected level and only a modest rise from March. It was their most, however, since July 2024. In Europe, they posted a smaller trade surplus than expected as exports underwhelmed in March and imports rose. It was a much smaller surplus than they recorded a year earlier. In Australia, the Westpac Melbourne Institute Consumer Sentiment Survey is picking up a range of recent trends. Sentiment improved marginally despite the fuel shock, but within that, more people are downbeat about their economy. The Canberra budget didn't give them a big impact, though. Job loss fears are still elevated, even if slightly less so, but homeowner sentiment is down sharply to deeply pessimistic levels, and consumer house price expectations have softened, even if they are still positive. A key thing to watch across the ditch is the widening sentiment gap between the young and the old. The baby boomer and Generation X cohorts are extremely weak. Sentiment amongst millennials is only modestly pessimistic, but Generation Z is outright positive, they note. Rich people whinging over losing their tax advantages in the latest Australian federal budget is becoming a feature of public discourse there, especially in the real estate sector. The US Treasury 10-year yield is now just on 4.67%, up 8 basis points from this time yesterday. And the price of gold will start today down $47 at $4,500 an ounce. Silver's down $2 at $74.50 an ounce. And American oil prices have fallen $3.50 to just on $103.50 a barrel, but the international Brent price is now just over $110 a barrel, only down 50 cents. And the Kiwi dollar is down 30 basis points from yesterday at 58.4 US cents. Against the Aussie were up 10 basis points at 82.1 Australian cents. Against the euro were down 10 basis points at 50.3 euro cents. That all means our trade-weighted index starts today at just on 61.9, which is down 30 basis points from yesterday. And the Bitcoin price starts today at $76,771 and up just 0.1% from yesterday. Volatility of the past 24 hours has been low, at just under plus or minus 0.9%. You can get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston, and we'll do this again tomorrow.